Alright, what's up guys? This is Taylor doing the nightly video for the 13th of November. It's about 3 o'clock, we've entered the power of the hour. And yeah, decent bit of selling here today. Tesla's down about 6.5, you got the Bitcoin futures down 3, the RUT down 3, QQQ down a 2 piece and change. So that being said, where are we? And I think from a swing trading perspective, we're pretty far from October. And what October was to me was a good example of, well, first and foremost, the benefit of a QQQ and an SPX daily squeeze. You got your compression, the buildup of the energy. The great thing about October being you had the buildup of the energy and you had great structure behind it, all the pretty colors, all the alignment, leadership and things that mattered. And I hate to use the word easy in trading. That makes for an easier swing trading market. And we got the pop, we got the easy part of the push. We have now since pulled back. And now we're kind of stuck in a boat where if you look at a bigger time frame like a weekly, everything's really bullish here. Great structure, good trend, no problem on momentum. The caveat is they could pull all the way back to a weekly 21 EMA around 6,500, about 3.5% lower. It'd be a decent clip lower in the short term. Wouldn't change too much here about the weekly chart. So bigger time frames are bullish, and then you go look at maybe a 30-minute cash S&Ps. Or a 15-minute, and you're pretty bearish on the indicator. Broken structure, bear momentum, bearish on the trend, and a negative 13. So that makes for what? That makes for, off of the live dashboard, on the ranking system, makes for a neutral market. Tough to trade. Even at times in a neutral market, even day trading can get harder. But as a general statement, it makes in both directions, it makes swing trading harder than it should be. You know, we're not here with a market equals bearish and a broken down QQQ, weakness in the S&Ps. It's neutral. Glorified chop, bullish on bigger time frames, ugly on the lower time frames. So breaking a few things down here for the indices. Right now, your leader would be the Dow Jones at 64% of its best score. You know, good for Dow. I don't think the almighty Dow 30 will take the entire market back to highs. Dow Jones at 64% of its strongest score, the S&P's at 11, the RSP at 6, and the great mystery, the QQQ to negative 2. So that comes from taking the scoring system on 8 different time frames. Negative 2 is about as neutral as things can get here. We got to figure out into next week, next couple of weeks, do the QQQs go from a negative 2 back to a positive 50? Do they go from a negative 2 to a negative 50? Till then, it's a hurry up and wait market, and I think one better for day trading. Q's at negative 2 and the Russell at negative 9. Now, none of these, again, are overly bearish. So if I think about the ideal market to wake up and get super aggressively swing short, that looks like market equals bearish, S&Ps are very weak, QQQ very weak. This tells me to be patient, hold off on big aggressive swing trading, put on the old day trading cap. And then the other issue here, breaking down the leadership for the sectors. Few things are pretty sharp. Biotech 83, silver 73, gold at 72. And that's great for biotech, great for silver, great for gold, healthcare, energy. The things I think matter, the things that can take the market back to highs. Neutral. We've got the SMH down here at a whopping 1. We have the XLK down here negative 11, and the XLY is a negative 16. They're not totally broken. They're not. They haven't got pushed off the cliff here. Not good enough to want to jump in and buy them. And then breaking down a few more things, let's go take a look at the key names here on the Big Ten basket. First place is Apple at 76%, and last place is the Meta at a negative 38. So a little back and forth there, and then going through a few different charts. We took a little profit out of JP Morgan yesterday. Great example here of how swing trading in this kind of market, it can have you pulling your hair out. So we bought the daily squeeze back here. Perfect setup, bought it on the green arrow trigger. We caught the quick pop. Had we not took our profits yesterday, look at that quick flush. And nothing's breaking down, it's all bullish, you got the buy signal. When the market's neutral, catching the breakout, catching the pump. It's I don't want to call it a low probability game. It's a lower probability game. Then there's going to be things out there like a Roku. We're long some Roku. And Roku's pretty solid here on the daily squeeze. Roku looks, I think, awesome on a 3-day squeeze. But if the market is chopping back and forth, tougher to get a breakout in Roku. And then we have some positions here in Tesla, and she's a naughty one today. Key thing I'm watching here for this one's going to be the weekly 21 EMA. And frankly, from a normal ebb and flow point of view, the pullback here to the rising weekly 21, it's not that out of the ordinary. You have the big weekly squeeze back here. They break it, squeeze fires, they give you the easy part of the push. That takes you towards the extension, you pull back a bit. I like it on the weekly. 15 points, good trend, good structure. If they get a close back below the weekly 21, I'll have to change my tune. The issue here in the short term for Tesla, the same issue for the market. We don't have a problem on a quarterly time frame or a monthly or a weekly. The issues here for Tesla are more short term. We have a sell trigger on a 15-minute, a 30, a 1, a 2. And that is my, as far as swing trading goes, my current conflict. My weekly chart says, yeah, you buy that dip. My 15, my 30 lower time frames say, pump the brakes, Junior. You maybe don't go and buy it just yet. So therefore, guys, on the swing trading side of things, we are being a patient bunch, and then, yeah, more of a day trade focus. I've become a big fan of, I swing trade for account growth and wealth creation, and then I day trade the futures, the 5-minute squeezes, 15, 30, hourly. I day trade for income. That could be helpful on a week like this week where, yeah, Tesla's pulling back on me, Roku's choppy. But if we can catch a quick trade like the 15-minute squeeze in the gold futures from yesterday. All right, waited for our trigger, jumped in, caught the pop, and then a few contracts that was good for, quick $1,000. Neutral market, I'm going to be a day trader. Things get a bit more bearish, I'll look for swing shorts. Things go back to the buy side, I'll be out here buying. But all right, y'all, thank you for watching. Have a great night. Hope you find it helpful. And if you guys want to help me out here, got a question for you. Down here in the comment section, for now, no right or wrong answers, but if we take this brand new daily squeeze on the S&P futures, down here in the comment section, I want y'all to let me know, do you think it breaks short or do you think it breaks long? So a better way to ask it, is there a better chance we go to 7,000 first or a better chance to go back to 65 first? Tell me your thoughts, put it down here in the comment section. Otherwise, have a great night, and I'll talk to y'all in the next one. Adios.
What's up, traders? This is Taylor from Simpler Trading. I wanted to thank you for watching our video, and if you liked the video, go on ahead and comment down below, hit that like button, and make sure you're subscribed and hit that bell icon to get a notification anytime we upload our next video. And of course, if you want to watch us trade live in real time with our own money, check us out at simplertrading.com. Until then, trade safe, and I'll catch you in the next video.